Most investors spend all day worrying about things completely out of their control. The Fed, inflation, the next recession, war, headlines, politics, interest rates. But if you actually want to succeed at investing, you need to focus on what you can control. Because in reality, there are only three things that you can control as an investor. And if you master these three, you will outperform and you will be better off than most other investors out there. So today I'm going to be breaking it down for you, all three of these, and let's go one by one into it. The first one that an investor should control is when you buy. Now, most people obsess over trying to time the perfect bottom. They watch CNBC, they wait for a crash, they keep cash on the sidelines forever. But here's the truth: even the best investors in the world cannot consistently time the exact bottom. Instead, smart investors focus on consistency. This is where dollar cost averaging becomes so powerful. If you consistently buy high quality investments every month or every quarter, you're averaging into the market over time. When prices dip, great, you get more shares. When prices rise, you're still invested and participating in the upside. The key here is to show up consistently. You need to be present. Volatility actually becomes your friend when you're a consistent buyer. The second one that you can control is how much you buy. This is all about position sizing. Most investing mistakes happen because people go too big, too fast, or they panic and go too small when opportunities show up. Think about this like risk management. Don't go all in on one stock. Don't put 50% of your portfolio into a particular theme. Spread your positions out, but also make sure they're meaningful. One of the best ways to approach this is called scaling in. Let's say you want to invest $10,000 into a stock. Instead of dumping it all in a single day, you could break that into 4 or 5 tranches over several weeks or months. This allows you to adapt if prices drop or new information comes in. Sizing protects you emotionally too, because when you're not over leveraged, you're less likely to panic when markets get volatile. Remember, your position size is your ultimate risk control tool. The third and possibly the most important control that you should have as an investor is how long do you hold. It's probably by far the differentiating factor between most successful and unsuccessful investing. Compounding only works with time. Markets will always have corrections. There will always be headlines telling you to sell. There will always be fear. But history shows us that time in the market beats timing the market. The longer you stay invested, the more likely you are to able to capture all of a market cycle. Let me just give you a simple stat here. Over any 1 year period, the stock market is volatile. It'll go up, it'll go down, and then it might just settle from where it started. But over a 10, 20, 30-year period, the odds of earning strong positive returns go up dramatically. The market rewards just one thing: patience. Holding great businesses through ups and downs allows compounding to do its magic. It's as simple as something that Buffett says, right? The stock market is a device for transferring money from the impatient to the patient. And that's never been more true. In ending, let me just recap and go on all the three traits that every investor should control. The first one being you control when you buy, so show up consistently. You control how much you buy, hence size up your positions smartly. And third, you control how long you hold. Stay invested and let compounding do its work for you. If you focus on just these three levers, you'll put yourself ahead of most investors who spend their days panicking over headlines they can't control. Master these three things and give yourself the best chance to build wealth over time. If you found this useful, make sure to hit that like button, subscribe, and drop your thoughts below. Which of these three do you personally need to improve on right now? Thanks for watching, and I'll see you in the next one.